the story is in the mid-cap and the small-cap end of the market. If you pull up the small-cap, mid-cap indices on an intraday basis or even on a year-till-date basis, you would see there is some stark outperformance versus the benchmarks. Well, one of the reasons why we are witnessing such outperformance in mid-cap, small-cap is because the flows, be it the FII flows, yes, that's correct. FIIs overall may be selling in India, but this is one end of the market where they have been hiking their exposure over the last few quarters versus a net reduction in exposure on a 5-year basis. And that is why you are witnessing such strong outperformance in Indian mid-cap and small-cap. In fact, that's the essence of a very interesting piece of research which Goldman has actually put out recently and which has become talk of the town. And the team, the head of the team, the author of that report is joining us today. We are joined by Sunil Koul of Goldman, who is joining us from Singapore to talk more about this phenomena which is happening right now and the factors and triggers behind it. Sunil, afternoon. Thank you so much for joining us. Talk to us about what were your observations regarding specific FII buying, which has not happened in a very long time, now seem to be concentrating towards Indian broader market, Indian mid-caps.
Sure, Ajay. I mean, thanks for having me on. Look, I think if you just talk about the flows in general, the big trend we have seen so far this year across the region, I would say, is that people have been sort of consistently selling exposure in China, and they have been buying Japan and India. So in India's case, I mean, the flows have been actually very strong over the last 3 months. India has seen foreign buying of close to $20 billion since the lows in March, which is a strong number. But I would say part of it is sort of the demand kind of increasing, as I said, from many of the regional and EM fund managers raising their exposure intra-region within India. Part of it is that we are seeing a lot of the global fund managers raising their exposure from very low levels into the market. What they have been buying based on some of the quarterly shareholding data we looked at, as well as some of the higher frequency bi-weekly data that comes out from the exchanges, is that foreigners in India have been buying domestic sectors, both consumption cyclicals like durables, autos, as well as some of the investment related sectors like real estate, industrial, as a case in point. But they also have been increasing exposure in mid-caps quite a bit. I mean, traditionally, foreign investors have always been more active in the large cap space because obviously they're kind of much bigger and liquid. But what we are seeing in the last couple of quarters is that the exposure in the mid-cap space has been quite a bit by the foreign investors as well, which is why we have seen such a sharp rally in the mid and small cap segment, more than 30% low from the March, which is almost twice the 15% rally in the large cap.
Without getting into specifics, if you could share some color on the preferences of the mid-cap which FIs are raising their stakes and holding towards. What are the type of companies which they are liking, and also where exactly is the money flowing out of?
Yeah, I think as I said, Ajay, there's a clear tilt towards domestic sectors and domestic cyclicals over global cyclicals. So both consumption and investments, durables, autos, as I mentioned, and from real estate, industrial is where they have been increasing allocations. On the contrary, I think that the areas that have seen more selling include, for example, tech and some of the commodity sectors in general, like metals and mining. So I would say it's kind of consumption and investment, which are obviously primarily domestic sectors where foreigners have been raising exposures, whereas reducing exposures in commodities cyclicals as well as both of which are sort of more linked to global.
Sunil, I want to also understand from you, because you may be interacting with your FI clients quite a lot. What is the triggering this kind of a change? Basically, we've seen net reduction mostly, and mid cap and small cap was an area usually FIs who invest in India traditionally have favored mega caps or large caps. What do you think is triggering this kind of phenomena? What could be the drivers of this change?
Yeah, I think part of it is that people have been kind of already sort of exposed in some of the larger cap sectors historically. I think what is happening is that people are incrementally increasing exposure in India, and they're sort of starting to take a little bit more market cap risk, right? Which is why they are dipping into sort of mid cap names. I would also note that some of the faster growing areas in the market or the economy are indeed in the mid small cap segments. If you talk about consumption, you have the QSR, the quick service restaurant. Look at the broader manufacturing sector and this entire Make in India and the PLI schemes that the government has rolled out. Many of those are still kind of geared into mid-cap things. And so that's a theme which we like and we've sort of written about it. But I think judging from the client conversations, I think that's where people have started to take the sort of more elements. So I would say that people are sort of chasing pockets of the markets where there is still decent visibility of growth and growth is still reasonably strong, and many of those areas are in mid-caps, which is why we have the exposure.
Sunil, also I want to get your thoughts on the valuation of the mid-cap, small-cap, a broader market spectrum, because it is always pointed out that Indian mid-cap, small-caps are stretched on the valuation front. Also, versus valuations, how are the earnings quality of the broader market actually panning out? Because usually they are gauged, if they have very superior earnings, then probably some amount of slightly higher valuation bands are justified. On these two issues, what are your thoughts?
Yeah, look, I would say, without kind of segregating into mid caps or large caps, but in general, I would say, which is the same phenomenon for the broader market, is that markets have rallied up quite a bit in a short period of time, whether you look at Nifty, whether you look at mid and small caps. So we do think that in the near term, things will consolidate here because valuations are indeed expensive. I think the one pushback we are getting on India from investors is that the challenging part is that valuations are expensive. If you look at MSCI India, it's trading at 21 times forward earnings, which is at a 60% premium to the broader region. It's the same thing in case of mid caps. I think valuations relative to their own history is expensive. I think what's comforting to us is that the earnings trends are still encouraging. We just had the reporting season, which concluded last week, and the numbers in India are actually coming in much better than expected. So, in terms of the profits, if you look at the second quarter calendar profits, they were up 48% year on year for MSCI India, which was 8 percentage point ahead of what the consensus was. And so what we are noticing that even though there is some slowdown in demand, for example, in consumption pockets, margins have actually a surprise on the upside, which is why I think the numbers are coming much ahead of expectation. I would also, Ajay, note here that when you look across the region in Asia, we are actually seeing earnings cuts in many other places. In fact, literally just yesterday, we actually cut our China earnings numbers down. We are also seeing downgrades in parts of North Asia like Korea and Taiwan. Against that backdrop, I think what we are seeing in India is actually earnings are coming better than expected. And we are also seeing now earnings being upgraded across a variety of sectors. So valuations are expensive, which is why in absolute terms, we don't think there is a lot of upside. We are still kind of baking in 8 to 10% upside for the market. But I think that the encouraging news at least is that it's being backed up by fundamentals, that we are seeing earnings come through for the broader market as well as the
Right. All right, Sunil, we'll let you go on that one. Thanks so much for joining us on the show today. That was Sunil Koul of Goldman talking about why FIs are preferring mid caps and are coming back and flocking to that space of the market after a long gap.